Financial accounting and reporting is undergoing unprecedented change across the globe, and the driver for this change is IFRS. Hi, I'm Cara Bellamy, the Corporate Controller at QAD. Today I will provide a quick overview of IFRS, its potential impact on global companies, and what you can do to prepare for IFRS. IFRS stands for International Financial Reporting Standards, developed by the International Accounting Standards Board, an independent private sector body based in London. IFRS has become the accepted reporting standard in over 100 countries around the globe. The IASB works closely together with its U.S. counterpart, the Financial Accounting Standards Board. Additionally, the U.S. Securities and Exchange Commission is actively driving the timeline of IFRS transition in the United States. The globalization of business, finance, and investment is requiring that we have a common global accounting standard. A globally consistent accounting framework like IFRS will increase the cross-jurisdiction and cross-industry transparency and comparability desired by investors and other users of financial information. It opens up additional international sources for companies seeking capital. The world has chosen IFRS. Today, more than 100 countries already permit or require IFRS reporting. Europe was first to adopt IFRS, followed by many Asia-Pacific countries. Brazil, India, South Korea, Japan, Canada, and Mexico are adopting or converging to IFRS in 2011 and 2012. The United States started its progression towards IFRS several years ago and is expected to announce definitive timelines towards permitting or requiring IFRS in 2011. As recently as February 2010, the SEC reaffirmed its commitment to a single global set of accounting standards, acknowledging IFRS is best positioned to be the global standard. Moreover, the IASB and FASB are actively working on converging the accounting rules of more than a dozen standards. These standards are expected to be effective in 2012. You can start your IFRS process by reading the documents available on QAD.com. You can also contact your QAD account representative and schedule a business assessment known as an IFRS Q-Scan. When you are ready to start, you should form a cross-functional team and implement IFRS taking a three-phased project approach. First, plan and assess, then complete the conversion, and finally ensure processes are in place to sustain on an ongoing basis. It is important to give yourself ample time in the planning and assessment phase. Converting to IFRS is a significant project which involves understanding and tracking accounting differences between IFRS and local regulations, as well as making the best business operations and policy decisions. Currently, there are countries with local variations of IFRS standards. In addition, there are countries who are in the process of converting to IFRS or who still require local standards. As a result, most global manufacturing companies will need to maintain parallel reporting for an undetermined period of time. Also, companies will need IT systems that have report writing capabilities, configurable business rules, and built-in internal controls. IFRS is not new to QAD. Many QAD customers have subsidiaries operating around the globe that report using IFRS. QAD's software supports parallel reporting, has built-in internal controls, report writing capabilities, and configurable business rules. QAD can leverage its experience with previous IFRS conversions. The QAD Services Organization has developed an IFRS Q-Scan to provide a cost-effective initial diagnostic IFRS assessment for your company. To start your IFRS process, please contact your QAD account rep and schedule an